Today we're going to talk about price improvement or positive slippage. We're all very well aware of negative slippage, but too often as a client you're not benefiting from price improvement. Now on the LMAX Exchange, or indeed any central limit order book, it's natural if you fire in a market order that occasionally you're going to miss that price and get negative slippage, and on other occasions you're going to get positive slippage. On LMAX Exchange last year, about 93% of market orders were filled at the price the client aimed for. 4.5% suffered from negative slippage, and 2.5% benefited from price improvement. That shows a natural market bias where the trend is your friend and clients in the market are generally moving in one direction, so unfortunately there's always a bias towards negative slippage. Now, in our forthcoming white paper, we examined 6.7 million trades from other LPs, other venues, as well as the LMAX Exchange. And we expected to see the same behavior for market orders. Unfortunately, we didn't. The biggest thing we saw was that price improvement was capped. So in that, sometimes you had negative slippage that ran into 4 or 5 pips. You'd expect the same to be true for price improvement or positive slippage. In fact, price improvement seemed to be capped between 1 and 2 pips. But the ratio, to be fair, between negative slippage and positive slippage was about the same at 2 to 1. So, what should you do if you're trading? Well, first of all, you can eliminate a lot of negative slippage by using limit orders. Most professional traders use limit orders. And normally they put a bit of tolerance in there. So they accept some negative slippage because really they want to pay 4, but what they're saying is, okay, I'll pay up to 5, but I don't want to pay 6, 7, or 8. So I'll send a limit order of 5 and hope that I get filled at 4. In this occasion, that 4 would come through as price improvement. Unfortunately, what we see on other LPs and other venues is that invariably the client is filled at 5. They never ever benefit from price improvement. They never get filled at 4. You need to look at the liquidity policy of your liquidity providers and your venues to see whether, if the price improves, by the time your order reaches them, will you be filled at a better price? On LMAX Exchange, that always happens. We say price improvement as standard. Our curve of positive slippage or price improvement is identical for market orders and limit orders. What does it add up to? Very simply, last year on limit orders, roughly 10% of all the trades on the LMAX Exchange, price improvement equivalent to $2 million ended up in the client account. If I extrapolate that across all orders on the LMAX Exchange to include market orders, it adds up to $20 million. If you're not receiving price improvement today, you should ask your liquidity providers why, because it's truly yours and it would be natural for you to get it. And if still the answer is 0, I suggest you come and talk to the LMAX Exchange. Thanks.